Why hello there. My name is Austin Arnold and I'm doing a mutual fund analysis project. In this project, I'm looking over the three main types of mutual funds, which are domestic, international, and sector. I am taking two funds out of each type and comparing them to each other based off of certain criteria of performance, turnover rate, expense ratio, and management, and I am selecting which fund that I would prefer in each category. For my domestic funds, I chose the Vanguard 500 and the Fidelity Advisor Balanced M. Let's go over the results, shall we? In the performance category, the Vanguard 500 performed almost identical to the S&P 500. This would make sense because the Vanguard 500 is what we call an index fund, which means it mirrors an index minus some expenses. It has performed moderately better than the large brand category on average. The trailing 12-month yield is 1.68%. The 3-year trailing return is 15.95%, and the 5-year trailing return is 14.36%. The expense ratio is 0.14%. This is relatively low and a positive sign for this fund. This fund has an extremely low turnover rate of 3%. What turnover rate is what percent of assets in a year have been sold and replenished. 3% is very low. The last category is manager funds. The notable former manager was Michael H. Buick, which served for 24 to 25 years. This is a very long time to serve as a manager in a fund, and it shows good stability. The current managers are Donald Butler and Michelle Louise. The second domestic fund that we're going to look over is the Fidelity Advisor Balanced M. It has performed slightly to moderately better than the 50% to 70% allocation index. This index is for mutual funds with 50% to 70% U.S. equity. It has performed slightly better than the moderate trading risk investment group on average. The trailing 12-month yield is 0.82%, the 3-year trailing return is 11.98%, and the 5-year trailing return is 10.27%. The expense ratio on this fund is 1.13%. This is considered on the high side. The reason why this is possibly greater than the previous fund we went over is this fund is not an index fund and it is actively management. These managers require more of an expense to cover their actions. For this fund, the turnover ratio is 86%. Now, this is very high, and it's higher than average cost to investors. On the manager side, this fund during its life has a total of 29 current and former managers. This is not a very positive sign. This makes the fund look unstable and uncertain for the future. Funds that have fewer current and former managers look more appealing because it gives investors a sense that there will be more stability in the future, and managers with longer tenure managing the funds may have more expertise. In the domestic fund section, I chose the Vanguard 500 to be my fund that I chose. And I chose this based off the management. Like previously stated, management gives a sense of assurance to investors. The longest serving manager has served for 25 years, while over here, there have been 29 managers over a span of not that many years. The second type of mutual fund that we're going to go over is the international fund. My first example of international fund is Fidelity Advisor Emerging Asia A. It has greatly outperformed its index of the All Country World Index, or ACWI for short. It has performed moderately better than the Asia Pacific, excluding Japan, category. The trailing 12-month yield is 0.56%. The 3-year return is 13.53%, and the 5-year return is 9.39%. Its expense ratio is 1.38%, which is higher on average, and it causes the trailing 12-month yield to diminish. The turnover ratio is 43%. This is not a very high turnover ratio, however, it isn't low either. It makes moderate costs to the investors. The managers of this fund seem to have good stability. They have long enough tenure to show stability in the fund, and also there aren't too many given the life of the fund itself. The second international fund is the Fidelity Canada Fund. This fund has greatly underperformed its index, which again is the All Country World Index. The trailing 12-month yield is 1.41%. It is on the higher side. However, the returns is what is disappointing. The 3-year return came in at 7.5%, and the 5-year return is at 4.21%. These two returns are very low considering what is average. The expense ratio is 1.02%. This is a moderate expense ratio, which possibly has been affecting the returns year to year. The turnover ratio is on the lower end at 26%, which means it is less cost to investors. The managers of this fund have been more than usual, given the lifespan. Some managers have had very short times in their respective position. That kind of makes you wonder why that would be. Again, I'm going to go with the management as the most important determining factor of why we should select a fund. As I've already said, the Emerging Asia Fund has seemingly good stability when it comes to management, and the managers have long enough tenure to show stability in your fund. This is all important also because in these non-index funds, these managers decide what assets are included in these funds. So better managers put better assets in these funds, which in return makes better performance. So to conclude the international, I am choosing the Fidelity Advisor Emerging Asia A as my international fund. The last kind of mutual fund that we will talk about today are sector funds. The first sector fund we were going to discuss is the Fidelity Advisor Energy M Fund. In recent years, this fund has not performed anywhere close to being up to par with its index, the All Country World Index. Generally speaking, however, it is close to the energy equity category. The trailing 12-month yield is 1.04%. This is a moderate yield, however, it is probably hampered by the high expense ratio and the front load related to this fund. Its 3-year return is 7.07%, and its 5-year return is an abysmal 0.09%. As previously mentioned, the expense ratio is relatively high at 1.36%. This could have a little bit to do with the underperformance of the fund relative to its index. The turnover ratio is 9%. That is a high number, but it probably has to do with emerging technologies. This, however, does make higher costs to investors. This fund has 8 former and current managers, and the current manager is John Down. The fund has somewhat of a stable management history. The last sector fund that we're going to go over today is the Fidelity Advisor Technology Fund. This fund outperformed the technology category and the All Country World Index as well. There is no trailing 12-month yield, which means no money goes directly to investors. However, the returns on this fund are massive. The 3-year return comes in at 29.07%, and the 5-year return is 22.13%. These are huge returns compared to other funds. The expense ratio is moderate. However, since no money is going directly to investors, it doesn't make much of a difference. The turnover ratio is 73%. However, with emerging technologies, this is kind of to be expected. This fund has 8 current and former managers. It is somewhat stable, however, other factors have improved the quality of this fund. The factor that I looked at to determine which sector fund that I wanted to choose is the performance. Even though the Fidelity Advisor Technology Fund has no trailing 12-month yield, these returns are very attractive to investors, and that is why I chose this fund over the Fidelity Advisor Energy Fund. That is my final fund to choose, and this is my mutual fund analysis project. Thank you.